Dividend distributions are often taxable receipts. Cooperative distributions are made by a cooperative to its members or patrons. At tax time, the cooperative sends the patron a 1099 patronage form for tax filing. The distributions are often a combination of cash and non-cash, but both portions are taxable. We're going to step through entering a single receipt that will record all of the portions of a cooperative distribution. First, let's take a look at the accounts that we need. Under Setup, Accounts and Accounts. If there's going to be a non-cash portion, you'll also have a stock asset. So under Assets and under Marketable Bonds and Security, we have a co-op stock. You will have an account that identifies whatever you want to refer to with that cooperative. And then under Revenues, we will have accounts for the revenue side of the patronage dividend. So under the account category of cooperative distributions, and in parentheses, it indicates that you would be getting a 1099 patronage form for this. You might have just one account for a cooperative distribution, but if you want to track the portions separately for cash and non-cash, then we would recommend having two separate accounts here. For example, we have a co-op distribution cash and a co-op distribution non-cash. If this is not a cooperative that you're receiving the dividend from, then you would be using an account under Other Revenue and Dividend Receipts called Dividend Receipts. And that is for tax filing purposes, so that the revenue that you're taking in for these different type of distributions are going to be recorded to the right activity rows on your tax forms. Okay, so now let's go and enter our receipt for the cooperative distribution. So we're going to pick our name for our co-op and the date that we received it. And in the amount at the top of the screen, enter the amount of cash that you received. So we're going to say that we received $22,480 in cash. And you can put the check type if you want and the check number that you may have received. In the first account, we're going to pick the revenue account for the dividend. So I'm going to type in co-op, and I have my different accounts here that I use for my co-op distributions, my stock asset, and my two separate accounts for identifying non-cash and cash. So I'm going to pick my co-op cash revenue account. If you only want to use one revenue account that will represent both cash and non-cash, that's fine. You can pick that account, and then you at this point would be changing the amount to the full amount of cash and non-cash. So for example, if that were $5,000, then that would put the remaining amount on the next line, where we would assign this remaining amount to the stock asset. In this case, we're going to separate the amounts out. So we're going to have the cash portion at the $2,480, and now we're going to go down to the next line, and this time we're going to pick our non-cash revenue account. And you will know what portion was assigned to non-cash, and you'll have that amount. Let's say in this case it was $2,520, and that will now automatically put another amount remaining at the bottom. This will be then assigned to our stock asset. So our $2,520 is not going to increase our cash account of First National Bank. It is a non-cash portion. It's going to increase our co-op stock. So on our next line, we're going to pick our co-op stock asset account, and that is going to be assigned to the non-cash portion, which is offsetting our non-cash revenue. If we expand out our co-op stock, we'll see that it's going to debit, which increases an asset. A debit increases asset to our co-op stock, and it is decreased in our bank, which is $2,520, the offset to our co-op distribution revenue account for non-cash. You can see in this line, we debited the bank $25.20 and we credited increasing the revenue for co-op distribution non-cash. So these two lines are increasing and decreasing our bank account, resulting in our bank not changing value at all by the non-cash portion. It's only going to be increased by our co-op distribution cash portion of the $24.80. The other thing you could have done on the co-op stock, this is showing a negative because the default template that gets assigned when you pick an asset is DT, decrease asset. Normally, if you're taking a receipt and you're offsetting that with an asset, that means you're selling that asset and that asset's going to decrease. But in this case, we're not decreasing the asset, we're increasing it, and that's why the amount went to a negative. What we also could do is switch this template to DT increase asset and change the amount to a positive amount also. The result is exactly the same. And still, we have a debit to our co-op stock and a credit to our bank. So whichever way makes more sense to you will work perfectly fine, and the end result will be the same. When we save this transaction, our bank is going to increase by the cash portion $24.80, and our stock asset is going to increase by $25.20, and our revenue of the cash plus the non-cash is going to increase by the total of $5,000. And these portions will show up correctly on our tax forms when we go to file taxes, and that is all done in this one entry. And you're ready to save.